the big beautiful bill, and there's no hyperbole there.
I remember a couple months ago. Is that really what they're going to call this thing?
I know. Yes, it's
going to take a while to actually decipher. And on our website, if you want, we've got a bit of analysis on what it means to individuals and some breakdowns. So you can find that at allworthfinancial.com. We're not going to try to go into all the little nitty gritty because it's frankly makes for a
pretty
boring program. But I think some of the keys, obviously, is maintain the tax rates, maintaining lower capital gain tax rates,
the state tax,
and the qualified dividend tax rates. And the estate tax is a big issue because it's going to revert back to essentially $6 million per individual, $12 million per couple. And I think probably most of our listeners think, well, that's still plenty of dollars. But what can really impact small businesses,
yes,
family-held businesses,
farms,
all that stuff. And so anyway, the current amount that you can transfer is almost $14 million per individual. Next year, it goes to $15 million, so it's $30 million per couple.
Yeah,
and I think that'll have some impact on some people. And what are the other kind of main? You can use your 529 for trade schools and stuff like that.
I think that was a good move.
100%, that was a great one. I mean, there's much in there that I think both people on this doesn't matter what political.
It's the spending side of it that scares me, Scott.
Well, we cannot continue this. I think we're 7% of our GDP is going to debt.
It's service debt. Yes. It's a
no matter what metric you look at,
it's high.
Correct. And it's the kind of place you would expect if we're in some crisis trying to buy our way out. Not a normal. Well, I don't know if this is normal. And it's like I think that it's going to take some sort of crisis before Congress can act
on both the debt and Social Security
and Medicare.
Yes. Yeah.
We all know that the entitlements can't go on forever.
You know what? I got to tell you though,
they can't. There's just not. There's not. I mean, part of it is just demographics. There's just not enough young people out there working
to support. You look at the numbers when it was started, the number of people that were paying in, and it's like a big old Ponzi scheme pyramid.
Yeah, there's no actual money. You put it into Social Security, it's not going in an account credit.
It goes. Treasuries, special treasury. It's but I got to tell you, they never even touched what's called carried interest. And I bring this up
explain what carried interest is.
Yeah, so carried interest is if you're a venture capital or private equity fund, right,
or hedge fund,
and you buy a company and you carry it forward for 2 or 3 years, and then you sell it, you get to treat it like a capital gain, like a regular investor would, like a regular, much lower rate for most people than ordinary income tax rates.
I believe for most it's 3 years that they have to hold it if you're that business structure. But why in the world they get this special capital gain when it's their trade?
It's their trade, right? Auto dealers don't get this, right? They buy something, they sell it a couple years later, 3 years later, 2 years later, 6 months later, whatever the number is. Why is that? Or a furniture store. So the reason
we know why.
Well, the reason I bring it up, I was talking to this gentleman who does quite well, and he was a venture capitalist, and he told me, he said, I got to tell you, I don't mind paying taxes. He said, but what they do with it is very troublesome to me. I said, well, I think that most Americans would probably agree with that.
Yeah, on both sides of the aisle, because there's different thoughts on where the money should go.
And then unsolicited, he said to me, the idea that if you're in private equity or venture capital, that you get this special tax rate that the rest of America doesn't get, this carried interest, he said it's an absurd. I said, weren't you a venture capital? He said, I thought that when I was paying the lower tax rate. he said that it was my trade.
Yeah, but it's all, they get a strong lobbyist group.
They do have I actually looked up.
There's plenty of money.
After I had the conversation with him, I looked up the amount of money that they actually think is spent on lobbying for venture capital and private equity. But the reason this becomes a big deal is the amount of money that is in the public markets versus the amount of money is in the non-public markets. The amount of money in the public markets relative to the amount of money in non-public markets. The non-public markets are growing because of the regulatory environment that public markets have.
And companies they're not even going public anymore. It's so rare.
More are actually coming private than going public.
Is that right? The number of companies going private is more than
the number that are going private. So at least the last number I looked at, that it changes on a weekly basis. But I just thought, it just shows you the power of lobby. It shows you the power of lobbying. It's and this wasn't addressed in the big. And that's kind of a pet peeve. We're off the subject already, but I just think this debt it's bothersome. It's worrisome. So I was thinking about it on the way to the show today. I said, "What are the headwinds in the market?" I'm like, first of all, it's the debt, right? But
eventually,
but the tailwinds are AI. And a decrease in regulatory environment, which is actually both a threat and something positive.
Yeah. And if you look at the U.S. markets, we're kind of priced to perfection right now. I mean, we're trading at roughly 22 times forward earnings on the S&P 500, which is pretty much frothy level, but as high as compare that to globally, global markets are at 14 times.
Yes.
Granted, the U.S. market has grown, our GDP has grown much faster than much of the world has.
Yes, has.
Yeah, has.
Yeah, but you see more, the returns in many of the foreign markets have become positive, and you see capital starting to flow in that direction.
And the dollar's weakened substantially this year.
Substantially.
Yeah, it's another area to keep
It's a strange world, Scott.
It's always been a strange world.
It's
interesting. It's a fun world though too, isn't it?
Well, I have to remind myself, and if you've listened to this show any length of time, I remind myself constantly that what happens in world events that you think are going to affect the market may or may not be true. Is why you have to have a long-term investment thesis and stick to it.
I'm reading a book right now on Native Americans, the Indian tribes.
What's it called?
Empire Under the Sun, I think, about the Comanches.
Read it, which is great. The technology that the certain Indian tribes, mostly the horse, allowed them to conquer other Indian tribes. Empire Under the Sun.
Yeah, but you just think about human nature, humanity. That's completely stripped down of what we consider a lot of civilized society to be. They were just brutal to one another. And in much of the world, and here we live in an era where I don't think most people are worried about someone coming and conquering their house tonight and killing the males and running off with their daughters. So the things that we worry about today are much different.
But we do worry.
We do worry, and we worry about the financial markets, maybe sometimes more than we should.